my voice like that, you know you got to start taking precautions. And that's what this video is about. It's about the precautions. It's about the low risk, high reward. But this is all from a precautionary mindset because the number one goal is to not lose. Don't worry about winning. You'll automatically win occasionally, and most of those wins will be outside returns. But the number one goal is don't lose. Now, the other thing you need to admit to yourself is that all of this stuff that we're looking at, this Bitcoin chart, this VIX, all this, these indices, gambling, all of it. It's all gambling. You have to admit that it's gambling because you don't win at gambling unless you admit that you're gambling. And what all that understanding does is serve to inform your position sizing. So position sizing is a key thing we're looking at in this whole trade setup that I'm going to show you here in the VIX, right? So bottom line is VIX is giving us kind of an opportunity here, I would say. It's a potential opportunity. I would say this is like pocket tens so far, right? Because you're hitting levels that you were in, before the major spike, right? You're in a straight downtrend on this thing. We're looking at the weekly chart. You just broke to a new low. So when I say pocket tens, I'm talking about the reaction potential. I'm looking to get a reaction trade out of the VIX. Not to say this thing can't just keep chugging along. And if I'm using, say, options contracts, for example, then I should expect to lose all of my money on every single trade that I make on the VIX during this move that it's making down. I'm hoping to get some kind of reaction. Now, we like the number 9, okay? The number 9 is a classic count. We like that number. Let's just look from the previous top of the VIX, which was March 13th, 2023. I remember this. I was skiing at Sugarloaf, and I didn't sell the exact top of this on my VIX position, but I got close. I made good money on a VIX position. And back here, right, I'm long crypto, right? I have my whole strategy is long crypto. Like everything I'm doing is long crypto, but I'm still looking for like sick trade opportunities, in the stock market using options. It's a different style, right? Crypto is just like, those things are options contracts that have no expiration. Okay. That's what crypto is. Option contracts with no expiration. So you look at options contracts in the stock market and you treat them differently because they have expiration dates, but they also have insane volatility comparable to the crypto market. So point here I'm trying to make is I think we have an opportunity on the VIX. Now, if we start buying now, it's like we're playing, hoping to, flop a set basically soon, right? But we should expect to lose everything we put into this trade in the beginning here, right? This is going to be like the first stab at this. We should expect to lose everything. But we're looking for that 8 or 9 count candle on the weekly chart to get a reaction like this. Look at this. 7 weeks, we got a reaction, right? 7 weeks from the top, we got a reaction. That's kind of where I start to see this trade emerging. What kind of reaction we get? How far are we into it? How far? 1, 2, 3, 4, 5. 5 candles off the top here, right? So this is where you start to make that stab, right? Expecting to lose everything. So how can you put a small amount of money into this trade, an amount of money that you're willing to lose to get, a good return on here? Maybe double your money at the start, maybe 5x your money, but also like at the start of this kind of trade, don't think about, making a shit ton of money. Think more about a decent, respectable profit, but you're barely risking anything. That is the key with this whole idea. So let's look into the options chain here, okay? Options chain. Oh, what do I got pulled up? I got the December 22nd call options. Oh, by the way, I'm using UVXY as my proxy to trade the VIX, but I'm really just, I'm not trying to analyze this trend. This is a daily, forget this. I'm just saying the ticker that I'm using to trade the VIX here is the UVXY, and I'm looking at, option contracts based off of that ticker, right? So I got? I got the December 22nd call options. Look at these prices here, right? So how much money do I think I could make on a reaction on the VIX? Well, how many dollars do I think the VIX could move? Well, it's like maybe like $3 or $4, maybe. Look where it is here on this specific chart, because now we have to kind of look at the proxy here. What kind of reaction are we talking about, right? A few bucks, you know, to hit the previous low, which would theoretically, that should act as overhead resistance. This area should act as overhead resistance. If we get back to that area, make a $2 move on this thing, and we're over here, we get them at 56. We get them at 56, right, for 100. So maybe you buy 200, 300 of these, 400, 500 of these, right? But let's just use 56 as our key number or whatever. And what do you think? You maybe get up here, you know, $2, right? That's not bad, right? That's not bad. But you're barely risking anything. And the thing is you probably, December 22nd, you tell me if that's long enough, right? I just said we're at week 5. I'm looking for 7, 8 week, 9 week cycles here. I'm buying these out for December. That's more than enough reasonable time if I'm barely risking any money, right? Let's say I'm risking $56. I'm buying myself to the 22nd of December. And at best, I could have some sick, you know, a gain like this, right? 56 to 335, like a big one, a juicy one, right? But at worst, I lose everything, not very much, and it's still very, very likely that even on a small reaction, I'm unloading a lot of these contracts at this price. So locking in a solid profit, and then I can let a small amount ride for some of these bigger numbers, right? So look how low risk this is. If you're thinking from the perspective of not losing money, the name of the game is to not lose money. You're gonna lose some money, but the name of the game is not lose money. Risk as small as you can and set yourself up to almost ensure profitability. But there is that percentage, that small, relatively small percentage chance that you could have an outsized return, right? And now all of this in combination with, you know, having a giant crypto position is a decent active trading strategy. You know what I mean? Like, you have to take your pocket tens, mine a set if you can. But the thing is, let's say I lose everything on that trade, even though I just made a monstrously effective argument for just that trade. Let's say I lose everything. Then what do? This thing keeps going lower. My pocket tens, they're like queens down here, right? They just became like maybe pocket queens at this, you know, at these levels, right? So I lost whatever, 56 per contract, right? And then it's like, okay, well, let's take another stab at this a little bit lower when we have an even more likely chance of a reaction farther down the timeline, closer to an inevitable reaction, right? Closer to an inevitable reaction is what we're looking for. Your pocket tens turn into pocket queens even lower because you're getting closer to that reaction point, that inevitable reaction point. It's coming, right? So if your queens fail, then you're going to get pocket aces at some point. You're going to get pocket aces, right? And if you only are spending $50, $56, $70 per 100 contracts, some kind of trade like that, dude, are you kidding me? You have more than enough time to make a monstrous trade and even think about those worst case scenario profits, right? Like this, you're not necessarily looking for that like 5x move, which is very possible in this situation, right? You're talking about like a 90% move if it retests that previous level. But I think it's good to think about it's going to retest the this level, because that's going to be overhead resistance in the most likely scenario. In the event that it just, like, for whatever reason just spikes through that, well, then you now have an outsized returns on your hand. So that's why you want to buy, you want to think of these kinds of options trades as like, no different than you would think of like shares or something like that, or cryptos. It's like you ladder in, you ladder out. You know what I mean? Like if I'm starting to accumulate December 22nd, I'll buy like the first 100, then maybe I'll buy another 100, maybe I'll buy up to 500 contracts, at some price like this over a week, right? Over a week. And then I just sit tight. You know what I mean? I just sit tight. And if those things go up to here, I'll maybe probably take like at least two of them, maybe three, either 2 or 3 of them off the table. Leave the rest for till it's getting like, till like the 15th, or, leave them as long as it takes. And those ones that I'm now leaving on the table, maybe I have like 200, maybe I have 300 left on the table. Like that could go, to one of these levels, right? And that's a basic trade. Like I said, I barely lost anything, literally lost anything, but meaningfully adding to my stack in a very, very high probability trade based on time and a lot of other things. So hopefully this trade strategy makes like basic kindergarten level sense. Like you don't need to know anything to kind of think of this stuff. You just have to like pay attention, make sure that you're always prepared to lose. And that is, I think, the guiding principle when you're talking about these kinds of trades. There's many different kinds of trades, but I'm talking about like counter trend reaction trades. VIX is probably your best tool to do those kind of counter trend reaction trades. And I feel like, the sentiment, because of how bullish I am, like the market is like, it's starting to sweep me off my feet. I'm like, yo, like, here we go. Like crypto's turning up, all this stuff. Like TRB is like already turned up. Stuff is like turning up. You're like, yo, yeah. It's like, yeah. But it's just like, this is the exact moment where you're going to either have like a reaction or something worse, right? I think it's more likely you're going to have a reaction. I think Bitcoin is going to have like a pullback within this uptrend. Look how, this has a lot of room to pull back, right? But obviously, right, I could lose everything, right? Lose my $56 per contract, counter trend reaction trade, right? And Bitcoin just goes bang, and like all the altcoins just start going like nuts, right? And I'm losing, like, think about how little money I'm losing. But if I lose that money, that means that all of this other money just explodes to just like mind melting levels. You know what I mean? So it's just like, what's going to happen next? And go back to the idea that think of crypto as like an option trade that has no expiration, right? That volatility is always going to give you some kind of outsized return when you get it right. You won't get it right most of the time. Understand that. Most of the time you will not get that trade right. But when you do, it's life-changing, right? It's life-changing. So how do you stay active with more consistent trades while your crypto is just sitting there? I'm talking about these counter trend reactions on the VIX are like classic basic, right? And it's all about position sizing. Don't ever convince yourself that you're good at trading. It's not possible to be good at trading. That's like saying it's possible to be good at gambling. The only thing that you're going to be good at is not losing, protecting yourself from every potential losing opportunity, because the whole name of the game is losing. The name of the game is losing. So how do you lose with a profit? It has everything to do with position sizing. It has everything to do with capital protection. So it's like you're talking about trades that are like, 1/100th the size of your total portfolio, right? This kind of logic, right? Because then you're thinking, right? You can do so many of those trades, right? You can do like thousands of trades at that size and basically never even make a dent in your stack. But any single one of those that pops off measurably, significantly increase your overall stack size. You see what I'm saying? It's like if you're thinking about time, might as well use options contracts if you have proper position sizing. It's a psychological trip, right? It should always be, like 0.1% of your stack. Something like that. Maybe that's just me, but that works. Like that's the working. Don't get greedy, right? Crypto is going to come through for you. Like you're going to have some big returns on crypto, but like think about like how do you actually trade? Because like after the crypto bull run thing is over, it's just back to trading again. That's the whole thing, right? It's like crypto has that like outsized return that comes cyclically, but the rest of the time you're just thinking about trading. Like you're just like, what idea am I going to use? That's all you're thinking of. So yeah, there you go, dude. You better subscribe to the channel. You better buy the Gas Station Mentality album. If you haven't, you watched this far, what kind of person are you? Come on, kid. because I just gave you like free guaranteed money is what I just gave you. So hopefully you respect that and buy the album, and I'll see you next time, kid.